If you're getting ready to purchase a home, one of the first things you need to do is get your loan pre-approval for your mortgage. Many buyers find that they're getting overwhelmed with all of the different loan products that are available and all the terminology floating around. So if that's you, stick around. Today I'm going to be answering the question, what is a conventional loan? Hi, and welcome to my channel. If you're new here, my name is Kristen Rapoli, and I'm a realtor with Keller Williams Select. I post new videos each week aimed at teaching you about real estate. As a former educator, I want to help you understand what's ahead in your real estate transaction. Go ahead and hit the subscribe button and the bell below so that you'll get notified every time I post a new video. What is a conventional loan? A conventional loan is a loan product not backed by the government. Instead, it's backed by investors and banks, and the insurance is paid by the borrower. Conventional loans are more common than FHA loans, and I'll talk about those in another video. Conventional loan requirements are set by Fannie Mae and Freddie Mac, and we're going to talk about several items in this video. But keep in mind that banks and lenders often put stricter overlays on these requirements. In other words, from one lender to another, you may see different requirements. It's always best to compare. The minimum credit score for a conventional loan is 620, but keep in mind that a credit score of lower than 680 brings higher rates and higher mortgage insurance. Essentially, conventional loans are geared more towards individuals with higher credit scores. Next, we'll cover minimum down payment. The standard minimum down payment for a conventional loan is 5%, but if you're a first-time home buyer, you could put down as little as 3% and still qualify for a conventional loan. I just want to mention here, if you're putting down less than 10%, many times an FHA loan will have better terms for your loan. So make sure you check with your mortgage professional so that you can get an accurate comparison. As a rule of thumb, the higher your down payment, the better your terms will be. One more thing I want to mention here is that if you are putting down less than 20%, your loan will also carry private mortgage insurance, also called PMI. If you end up with PMI, make sure you pay attention to your equity. As you make payments and your equity rises above 20%, you can actually call the bank and have the PMI removed. Next, I want to let you know that conventional loans can be used to pay for a primary residence, which is a home that you live in, but it can also be used to pay for a secondary home or even an investment property. This is not the same with FHA loans, so make sure that you remember that that's a key difference. FHA loans require that you live in the property. That's it for today's lesson on conventional loans, but there's a lot more to know. So if you'd like more information, just reach out and I'd be happy to have a conversation with you about some of the other items. And remember, in this white hot seller's market, as a buyer, you want to get that pre-approval before the house hunting begins. Many times the homes are being sold after just 1 or 2 days on the market, and you don't want to be scrambling to try to get a loan pre-approval at the last minute. Make sure you're ready to make the offer on the home you love when you see it. If you learned something today, make sure to hit the thumbs up and leave me a comment. Thanks for watching, and I hope I taught you something. See you next week.